Hey, good morning. Let's go over today's trade plan. So in the overnight session, we've seen the sell side be quite dominant, but at the same time, responsive buyers have been defending the 80.5 to 82.5 support zone. At this point, heading into the open, we are going to continue using that 80.5 to 82.5 as an important area of support, and it will serve as the micro bull bear zone right off the open. So that means that if the market continues to hold above 80.5 to 82.5, then we could see a buy response and we could see a continuation back up into the initial resistance zone quite easily at 87.5 to 90. And from there, we could even make our way back up towards the gap fill and the previous VPOC at the 95 quarter to 96 quarter area of resistance. So how the market responds to 80.5 to 82.5 is really going to be very telling and help us establish our short-term directional bias right off of the open. Now, in the event of a failure at 80.5 to 82.5, we could see a move down into 71 to 73.5 quite easily, and potentially even down into the 61 to 63 support zone, at which point you would really be exhausting the range, and that is a very high odds area for buyers to be active. So 71 to 73.5 calls for some caution or discretion in real time, where we have to watch and see how the market approaches it. If it's exhausted into it and we're not seeing any trend down type internals and big downside momentum, then 71 to 73.5 is still a zone where buyers could be active. But if things are looking too weak in real time, then perhaps use some caution at that zone, because we could potentially go down to 61 to 63. That's a good area for buyers to be active, and same goes for the 54 to 56.5. That would be a range extreme, and it is a very good spot for responsive buyers to jump into the market. So those would be good areas to trade long. And on the upside, we're going to have to see how the real-time momentum situation develops. This market has been balancing in a very wide range. We've seen a lot of volatility recently, and we need to pay attention to the real-time momentum situation. So keep an eye on the NYSE tick, see whether there is any clear skew, one side or the other, above zero, below zero. And if there isn't, then it could simply be a balance type session where, we go up, perhaps we test initial resistance, get some response, but then from there we go up higher into the 95 quarter, 96 quarter, and that would be an area where we can expect sell side activity. And then same goes for 2100 quarter, 2102 quarter. So, given the way the market is set up, we are open to taking trades on either side, long or short, but we do have to be mindful of how the market is setting up in real time, because we could get a move back up towards the gap and then previous VPOC. So 95 quarter, 96 quarter could be a decent spot. 2100 quarter, 02 quarter is a good enough spot to anticipate sell side activity. 87.5 to 90 is going to be something we have to determine in real time. It's not something where it's an automatic short or anything. It's really going to depend on how the market's approaching it, how weak things are looking in real time. If there's not really any broad market weakness, and we are seeing a reversal type move take place where we're getting upside momentum, then like I said, we could be looking at a move back towards the gap fill. So keep that idea in mind. So those are the main thoughts heading into the open. Let's see how the market responds to 80.5 to 82.5. That is really going to be the key support heading into the open, and we will take it from there.